Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, June 13th, 2023. The markets continued to move strongly higher today, and that was pretty much anticipated from overnight action and just the position that the market is currently in. I have been dissecting and resecting my personal counts that I have here for both the S&P and the NASDAQ. And after yesterday's breaks above resistance, I threw up some different levels, feeling that where we were in the whole scheme of things as this current rally continues to progress. And after today, I tried to again reassess what I thought the market has completed today and where we're going and how much further we have to go as far as upside is concerned. And it drew me back to putting my original count for the S&P put within this particular sequence back into place. So again, just catching up on the progress. I think we're inside a minor fifth wave, and inside of that, we're now putting in the minute fifth wave, and it is a beaut. It's really very strong, and we're seeing a lot of activity in the S&P as the market continues to kind of catch fire. And I think a lot of this now, of course, is going into, we got the CPI number today, and it was showing that consumer prices have increased, but the market was okay with that. And year over year, it seemed to be an improvement. And so it all works out. And the market just initially took a nosedive that lasted about 30 seconds. And they just rallied it all back and then continued the rally for most of the day. Where does that place us? So I'm here on the 4-hour chart, and you can see we have 1, 2, 3, 4. We're inside that fifth. Now, I want to just start putting together the Fibonaccis that go along with this particular move and to see where we are and what could possibly be left. Now, if I initially go in, and my first one that I'm going to put up is if we're in a minor fifth wave, it's related to this first wave. And we are now kind of gone beyond a 1 point. Well, let me just kind of straighten this out just a little bit. Excuse me for 1 minute. I want to get the external things that we don't necessarily need that do not actually apply to this current Fibonacci setup. So I'm just going to put things into line. It's going to clear up all those lines that we see and now give us a clearer picture. So where did we reach today? We did reach 44.23, I think it was. And this high right there, 44.23.25. So that was resistance. And that's a higher resistance level for the primary B wave, which again, the S&P remains within. And so it got there, it stopped, it started to pull back. I'm going to bring it down to the hourly chart. And so we can see now we're inside of this, and I'm going to tell you how I'm particularly counting it is that 1, 2, 3, 4, 5. That's a small wave 1, small 2, and then we get this beautiful third wave. It's a 1, 2, and then it starts to climb as we get into it. The 3, the 4, the 5, and that is just this small internal third wave. So now we got to do a fourth wave. Actually, the third wave ended there. We have a fourth wave coming in, and you can see the market just it started it nicely, and then it just kind of decided to rally into the bell, which is not uncommon. It's kind of more typical right now. And so I'm thinking that what we probably need to do is a quick little pull down, or pull back. And we got 44.02, and we got down to 43.80. I don't think it's going to go quite that deep, but it could. And we're going to relate it to that previous fourth, which sits right here. So this price territory is 4,400. We're going to say down to 4,380. And then the market will again rally. So again, then we're going to start to tack on to this. Well, where else can it go? So let me pull this back open again. And I actually have to go out to that 4-hour because this particular wave has been pretty incredible in terms of its size. Now, again, following Elliott rules here, Elliott always told us that within a 5-wave sequence, which this is, wave 3 is most often the longest and the strongest, but what it cannot be is the shortest. So I've already measured it out. Wave 1 is 234 and wave 3 is 261. So wave 3 right now is not the shortest. Wave 1 is, because wave 5 is actually pretty dynamic. 4107 to 44, so we're already up over 300 points within this 5th wave, and it's not done yet. So that all works. So I'm going to keep this count in place. But now I want to measure out and see what does this look like for that finishing minute wave. So we need to add some additional resistance levels, because again, on the minor 5th wave, we've now exceeded the 100%. So next up on a minor degree would be 4487, I'm going to call it. We'll round it up. 4487. Now let's see what we get when we take the same measurement of wave 5 as compared to wave 1. Come on, there you go. So we have some additionals. So we've now surpassed, the minute 5 has surpassed 0.618, where the minute 5th wave would be 0.618 of that first wave. And that was right here at 4410. So it got up above that nicely, got up to that next level, which, by the way, also had a level right in here. Let's see if I can get that all up there. And I think it was right there at 40. It's got a double in there. Right at that 4423. So it reached that level. But the actual first one that we look at is that equality. And equality is at 4473, I'm going to call it. So it's actually 4472.75. And that's very close to where this minor 5th wave would reach its next level in terms of Fibonacci relationships between the 5th and the first wave. And that would be that the minor 5th wave would be 1.618 times the length of the minor 1st wave. So here we have a nice little cluster of what could be going on right now within this wave up. So we have some additional resistance. And again, I'm going to go inside here and take out what we no longer need. So I don't need to be putting these lines on the screen to give us any. I need that one. I don't need that one. And I need this one. So we're going to use those same ones when we're comparing these waves to wave 5s to their first waves. Turn that one off. Okay, so now it cleans it up. See, all that internal interference, I guess I could call it, is gone. So we still have 4422. We had another level right up there, but I think it was like a 29 or 23, which we did hit. But in terms of this 5th wave, oops, there is one that I took off and I think I need to put it back on. Excuse me for doing it. It is on. It's right there. Where's the 0.618? Huh. I forgot to say okay. It should be in there somewhere. Wow. All right. So let me redo this. But I don't see what I'm looking for. So I'm going to do it over again. To there, to there. And come on. The 618 is right there. It was exceeded. So it's no longer valid. And 4437, some people would use it, but it's not necessarily one that Elliott talks about. So again, let me just clean that up. I'll leave the 618 because that is a comparison. And that's the one I was looking for. We're going to go one more time here. Thank you for your patience while I readjust this chart. We're going to go there and then go there. Okay. So we saw 4409 was actually 0.618, and that's where this minute fifth wave would be equal to 0.618 of that minute wave one. But remember, what comes up first, the first one, is equality, and that equality is at 4473. And again, that matches up pretty cleanly with 4487, I'm calling it, which is where the minor fifth wave would be 1.618. Now, let's say this minute fifth wave exceeds 4473, and we exceed 1.618 at 87. Our next level up is that the minute fifth wave would be equal to 1.618 of minute wave one, and that's at 4575. So that's another level that technically this market can reach. So we're going to leave it in there. So those are the fib levels continuing to move higher. And you can see outside here, we can continue. Our next level that meets in terms of a cluster would be the minor fifth wave being 2.618, and that comes in at 4721, and the minute wave 5 coming in at 2.618 is 4739. And then right above that, my friends, we do have that all-time high. So again, while may not be necessarily looking for it, it cannot be discounted. So when I'm talking about the potential for this primary B wave, one that I continue to talk about, but I've not really brought to the forefront, but I'm going to do it right now, is the potential, and I'll take this back out to the daily so we can see the chart. The potential is, I got to take it out actually to my weekly. Here's the all-time high, 4808, and it actually was 4808.25. That's the all-time high in January of 2022. If indeed this is going to turn into an irregular B wave, right? Remember, it's a primary B wave, can be irregular. What we then would be looking for is for it will break above 4808. So as we continue to climb, right, it may take an adjustment on the internals. So, but we're going to let the market tell us. Let's remember one thing. I can't tell the market, oh, you got to do this. Nor will you ever hear me say, I guarantee it, or it can't do. Market can do whatever the heck it wants. And I'm just tracking a move. And the potential for the move to go to certain levels increases as the market lets me know. So I don't latch onto what CNBC says or what Bloomberg says or other financial media says or anything about my positions, to be honest with you. I go with what the technical picture tells me. That's what Elliott is. And it's not necessarily a science. It's an art. We're measuring the human emotional responses in a market, and they're very trackable. They produce reoccurring patterns. And based on those reoccurring patterns, the fact that we're in what everybody wants to think is this screaming bull market now, fine, you can think that. That's okay with me, but I'll tell you how it fits within the Elliott count. And that would fit in terms that it would be an irregular B wave. Now, whatever comes after that, nobody wants to say, oh, you're a bear, or you're constantly looking for a top, et cetera, et cetera. Trust me, I'm not constantly looking for a top. I'm working a pattern, and I'm marking it up to see where it has the potential of stopping and then turning. Nothing goes on forever. And if you really want to talk about a bull market, then please come back to me and discuss all of the givens that we know that don't fit into this technical new bull market. And what we confront going forward doesn't fit into a new bull market. But I will tell you, it fits cleanly into a B wave. And I would encourage you to go and read about it and to learn what's the psychology, what's actually going on in the marketplace in a B wave. And we're in a large B wave. So the bigger the B wave, the bigger the move, the bigger the whatever. So that's kind of the story. But I'm not saying that I'm constantly searching for a top. I'm tracking the move. And as I count it out, I can tell you, it's like from what I'm counting, it appears we're in that final legs, plural, to get up here. But that doesn't mean we don't continue to extend. That doesn't mean that finally it does make itself clear. And I do need to move things around, and we'll show that we have strong potential. That potential now is in the picture, and I'm showing you how. Here we have some upside targets. If it starts to break above 45.75, we raise the probability scale substantially that it's going to either get straight up here and stop, or it's going to break. And if it does, we go to the next fib levels that tell us where it can go. And my friends, here they are. So before you tell me that I'm looking for a top, take that in note and put it in and realize, no, that's potential. And the probability scale would increase. Am I looking for that right now? No, I'm following the market. And so it may get to here. If it doesn't and it keeps going and it does break, that's the next level. Now, back to what I think could happen for tomorrow. I think we need to finish this ever so small pullback. So I think we stand a chance we might come back down to 4,400, down to 43.81, and then rally yet again. And that decline may happen overnight. Could happen in when the Asia markets open, can happen within the Globex session, and more than likely in when Europe begins to trade. But I am going to continue to look for higher levels. I am going to continue to look for the resistance levels that I just discussed. And again, here we have them. Broke that. Our next level is equality, 44.73. And outside of that, our next level is 44.87. Those are the levels that I think we can get to, and we may do it tomorrow. Or we may do it on Thursday or Friday. Or it may come in next week. But those will be the next levels. Always allow the market to tell you. We cannot tell the market. Over in the NASDAQ, same story. I didn't move it back around. I do believe that this count is correct. And I brought the minor third down to here, the minor four here, because we're not getting any pullback of any strength here. And it is kind of beginning to look like 1, 2, 1, 2, 3, 4, 5, a 3. And that's going to be a very small 4. And we're now bopping up in a 5. So what do we have? If indeed the minor 4 is here, and let me show you something. Within reality, let me just put this out to the 4-hour chart. When we take a look at a fourth wave, what thing that Elliott usually told us is the fourth wave will find its terminus, its endpoint, in and within the fourth wave of one lesser degree. Well, this is minor degree. What's one lesser degree? Minute. Guess where it ended? Right there in the minute wave. So again, Elliott works. Elliott said, hey, that does work. As small as it is, it continued to adhere to Elliott guidelines. So with that in mind, here we launch in that minor fifth wave. So the primary reason why I drove it back down was one reason I took it away and brought this up here is because it started to break. But then I looked at it again and I thought, no, that works. And we're in that minor fifth wave. So what are my what are the fibs that go along with that minor fifth wave? Well, first one, minor wave 5 is going to be equal to minor wave 1. Well, guess where that is? 15,703, 704, we'll call it. Let's round it up. That's the first one. What's the second most common is that minor wave 5, or the fifth wave, will be 0.618 of the first wave. That's at 15,216. So that, while is our next fib level up, the one that's more common is equality. So while that'll be there, and it may stop and it might take a pause, and it may stop and take a pause here, these all remain valid. Now, what's the possibility here? I got to go out to my weekly again. The NASDAQ all-time high is at 16,767.50. We have where minor wave 5 would be 1.618 times the length of minor wave 1 at 16,492. That would be a squeaker. So what can the NASDAQ, if the S&P can break above, so can the NASDAQ. So you can see how I have to start to include this now, because the market is not necessarily slowing itself down. I can't tell you for certain that that's going to break, but I'm going to take the step to show here are the possibilities. If minor wave 5 does continue to really launch higher, and we break above 16,767, we will have broken the 1.618, and its next level is 17,768. And that's where it becomes 2.618 times the length of that minor first wave. We go by multiples when you're using the fib. That's how the Elliott Fibonacci relationships come into agreement with one another. So that we don't have it in between, that's what the expectation would be. But then again, when we're looking at if it's an irregular, where this larger primary B wave would be creating a new all-time high, then we rely on 1.236 to 1.382. So what does that tell us? Well, we have 18,250 and 19,167. Well, look where this one is. 17,768 and 18,250 on this level are pretty close when we're getting the moves that we're getting. When we're getting all of this push into what's going on. Now, I'm not going to quantify or qualify why they're buying. I'm not going to quantify or qualify, are we indeed in the new bull market? Market's going up. That much I'm going to give you. That is true. And once again, I am going to tell you, I'm not always looking for a top. And I do trade from the long side. And there are some beautiful trades going on. And there are a lot of other people that follow my work and also come back. And they're playing it from the long side. And they're making terrific money. Solid profits. So no one is being misled. If you listen to what I am saying, I'm not always looking for a top. I'm telling you, we still got upside to do. Why wouldn't you want to play it? So there's our story. Our moving averages here on the weekly, the 200s are just starting to turn. So again, look at all this move we've had. And what a great move it's been off of that low in October. So I'm going to continue to count it. And I'm going to look to see where we come in. But bringing it back down to at least a 4-hour chart, we do have continued upside before this is complete. And these are now the levels that I'm going to be checking out. 15,000, I think we had that at 216. Then we have 321. Then we have 422. Then we have 15,703. That's the relationship number one that I'm looking at. Potential is for a move up to 15,700 right now. That is a high probability. All right. So again, we're now continuing to move higher a little bit here in the NASDAQ. We're going to check it out. We'll see what happens. Next update. So tomorrow, by the way, sorry, tomorrow, of course, big day. Tomorrow we get the PPI, the Producer Price Index, and then we get the Fed decision at 2 o'clock. Now, the market is basically letting us know, and if you take a look at the treasuries, they're a little bit inconsistent and they're a little bit worried about what's actually going to happen. But the perceived move is going to be, there's going to be a pause, that the Fed will take a pause more to give the markets the opportunity to start to make adjustments, because the Treasury Department, of course, has got to start a great deal of auctions. And so we started those, and we're starting to see some of these auctions play out. And then we saw the bond market start to turn lower. And why was it turning lower? Well, because the auctions are not coming in lower, they're coming in at higher rates. So with all the money that the federal government needs to raise right now to pay our bills, to get ourselves caught up to whatever the deal is, the market is now perceiving that they're going to have to come in at higher rates. And if they do, I want to just show you and tell you, I'm not saying it's going to happen, but it could create a pretty strong liquidity drain out of equities as hedge funds, firms, traders start moving, because they're going to look for that return. If we're going to start having, if the government's going to have to start paying 5.25%, 5.5%, or greater for these auctions, then you're going to see people take the money out of the equity market and put it back over into the bond market. And if the 10-year, the 5-year, the 2-year, the 30-year, those all are coming up in auctions. So we'll see. But we'll listen. The Fed comes out. The general feeling right now is that he will pause. The Fed will pause. But pay very close attention. Now, remember, the initial announcement comes out at 2 p.m. Eastern. But at 2:30 is when Jerome Powell steps up to the mic and has his press conference and his statement. So the market will be listening very intently and closely as to what he says. And will that be interpreted as hawkish or dovish? This is an important thing, because it will directly affect this market. And it can turn it on its head if it's not what they want to hear. Okay, that's going to be it for today. Our next update will be on Wednesday, June the 14th.